Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value, and one thing that I think provides a lot of value is me answering a lot of your guys' questions. It doesn't mean that I have all the answers. Obviously you're asking me questions, so I'm going to give you my opinion. It's just a financial opinion. It's not financial advice by any means, but it's basically what I've learned in my investing time frame, and I've been investing for 18 years. I'm an engineer by trade. I kind of stumbled in the beginning being an investor. I didn't really lose a ton of money, but I didn't really go anywhere either in the far beginnings with some of my money. Some of it I kind of lucked out because I didn't really know. I didn't tie everything together. I think I've got this stuff pretty well tied together and what drives what. So one of the questions kind of dives into what drives what and how I look or manage or what my paradigm is. It says, thanks, Andy, great perspective. New to this, but one thing that always puzzles me, do you buy at the high end? For example, REMX or LIT. How do you predict the ultimate target? And a lot of people they're stuck on targets and prices. I don't do anything with targets and prices. What I do is I look at conditions. That's the big difference. So I don't look at, you can look at a chart pattern, get a predicted output to the upside, like a measurement of, hey, this move is going to be X, Y, Z. But what I do is I look at for conditions. And I look for market balances. The conditions that are coming ahead of us is what I want to look at. For instance, rare earth metals, which is REMX. It also has lithium in it. It also has cobalt and some of these other metals. Neodymium, some of the other rare earths. The reason I like REMX is a twofold reason. Well, it's probably maybe even more than twofold, but here's some major reasons, some major drivers. REMX has a good chart pattern. If you draw it out, it kind of comes in, it created a huge cup and handle pattern. A massive one. And I've showed that before on the channel. And one of the reasons why I like it is because it possesses that pattern. The pattern is developed by a whole bunch of humans interacting with each other. It's herd mentality. Herd mentality creates patterns. These patterns create pretty good statistically significant meanings that it could potentially go higher. Then you look at the market balances. The supply and demand balances is what I look at. The rare earths and how we're going to ramp electric vehicles up in the future is going to provide the supply-demand fundamentals that are going to favor a higher price in REMX and higher prices in rare earth metals, lithium, cobalt, and all of the metals that are in REMX, the majority of those metals, if not all of them. And the reason I chose REMX is because it has the producing companies, and there's not many companies in the world that produce rare earth metals. The majority of rare earth metals, like 99%, come from China. And this one holds a lot of Chinese companies that produce these types of strategic materials. So if we're going to have an electric vehicle boom, and it's going to happen very quickly, and they're going to throw a bunch of money at it, I am positioning myself in some of the producers where it's being produced. And a lot of these companies are probably going to source some of this stuff probably from China. Maybe, maybe not. But at least some of it's going to come from there. Chinese-made cars are going to come from probably Chinese rare earth metals if that's the only spot on Earth where you can get it. And if you've got a one-stop shop where you've got lithium here, cobalt here, and rare earths, well, it's all in China. So they're all going to go to China and say, hey, can I get all this? And they're probably going to provide solutions for as a one-stop shop. So my guess is REMX is positioned pretty well for that move coming up in electric vehicles. And I'm not going to do anything, and I don't have a target necessarily on it until the conditions start to change, until we manifest, the price manifests higher and moves on up because of the market conditions and the market balances. We are just starting to build this stuff, and it's going to ramp massively higher. And that's where I want to be positioned with some of my money. If you pull out a longer term, you can make the case that URNM is in a large head and shoulders topping pattern. Same with COPX. Now, Here's another thing. I don't rely 100% just on the pattern. I am trying to align a whole bunch of things where these stars start to align. A topping pattern, I would say, is probably legit in copper, especially if it's a long-term one, if we see market conditions that also basically match what you're seeing in the charts. Copper is going to run into a massive deficit here. We're probably already in one. That's why prices are at basically all-time highs. We are going to use the living poop out of copper in the next 10 years, 20 years, 30 years to create more renewables, more electric vehicles, more whatever we want to do. Copper is going to have to double its output. It needs to double its mining by 2030. I think it was 2030 or 2040, somewhere in there. It needs to double its entire output. I don't know if that's possible. I don't know if that's possible to do, but that's what the demand wants. The supply, I don't think is going to be there. It's definitely not going to be there within 10 years. We don't have enough projects in the pipeline to supply as much materials as what the world wants. We are going to hit deficits in copper. Price of copper is going to go skyrocketing to get this demand-supply balance to be balanced out. So I don't think that we're going to have a long-term copper decline. We can see it in the short term. Short term, anything's game. Long term, I don't think so. There's just too much demand, not enough supply. And the conditions in a real estate cycle is probably going to go higher. And when I mean real estate cycle, I'm talking about the United States real estate cycle. Yes, the real estate cycle can cool off, and no, it's not going to go straight up forever. I understand that. And it's seasonal. So we're going to move up, we're going to cool off, we're going to move up, cool off, and it just cycles back and forth with that seasonality. Are the gains in real estate going to be 24% year over year every single year? No, I don't think so. But it could be high single digits or mid single digits continually. That's your inflation. Your inflation's going to come from that. That's your base inflation. Anything else that they're printing and giving away, that's just icing on the cake. So that's I don't think URNM is also, it's not a topping pattern. It could be in a short term. We could see a short term pullback and we have this little head and shoulders pattern. If there is one, I didn't really look at that. But on a big picture view, these things have to go higher. The money's not there. It is not in uranium. It is not in copper. It is not, the copper mining companies have not accounted for anything, that move of copper. They've hardly gone up. We have such a great opportunity in all these companies where we could ride these things a lot higher. Short term, though, I know people, they mix this up sometimes when I say it. Short term, anything can happen. Long term, I think we're moving up big time. We're going to see a massive of money migrating from stocks and technology stocks into commodity type stocks. You're going to see that money rotate in and precious metals. That's my thesis. That's what I'm looking to see. Higher interest rates are the trigger point for that to happen. Here we go. Moving on down. I suspect the uranium juniors are overbought at the moment. A 50% plus correction would be a great entry point for a long-term value. However, my gut feeling tells me the long-term 10 and 20xers are in oil. I think that uranium, at this point, uranium is more underpriced than oil companies. The ratio of uranium is cheaper in relationship to gold than oil. Historically, uranium has had more leverage than oil has. Natural gas is also one that has massive leverage. Natural gas is a fantastic opportunity right now. It just broke out of a long-term pattern to the upside, a big long-term downtrend. And natural gas could go a lot higher. We've got the winter coming up at some point, and we've had a warmer summer. Natural gas, I think, is a very good bet. It's also one of the more volatile plays where you can get a lot of leverage. Some people don't like leverage because they don't like volatility. And the companies that I like in natural gas, some of them are down right now. SM Energy, CDEV, CPE, SWN. And honestly, I think we're going to have natural gas problems. I don't think we have, we have natural gas, but I don't see this huge production coming out of America with natural gas. It's almost like, I mean, our inventories are getting tight. And with more renewables that we put in, we're going to burn more natural gas, because what it's going to do is when you have unreliable power being generated from solar and wind that is not stable, they're going to have to, and what I mean by not stable, the wind doesn't blow and we have nighttime. We're going to have to run natural gas over time, because that's what our swing producers are. It's the natural gas power plants. And then we have to heat our homes and cool our homes. Cooling, AC, runs electricity. Well, if solar's not there or the wind's not blowing, we got to run the natural gas to run the electricity. So on hot summers, you're going to burn more natural gas, more electricity. So natural gas, I think, is an excellent spot. Oil is an excellent spot. I just read a gigantic writing from they have a mutual fund, some mutual funds, and they released some investment information. They think that we could potentially see the first oil basically deficit, where we've always had we've always had supply outproduce demand. We've never had demand greater than supply, where we had a deficit. They are projecting that we could potentially have a deficit Q4 2022. That is massive. We've never seen that before. I don't know what price is going to do in that type of scenario. And oil is one of the best inflation hedges. Same with uranium. Uranium's a very good, big leveraged move. So what I do is I look at all of these things. Oil, natural gas, which is kind of tied together. Uranium, copper, platinum, silver, tin. I buy all of it. And if I forgot something, fertilizers, I own some fertilizers, Mosaic. I own IPI, Intrepid Potash. I own a few, I spread my money out. I'm diversified amongst those. If one of these things goes to the moon, I'm going to be on that ride. I might only have a little bit of money, but you know what? It's worth the ride. It says, please concentrate. Maybe inflation is rejected and roll backing. Rent moratorium ended. Economy going in limbo. Jobs data low. Everything pointing inflation can't follow with this miserable data. Yes, money QE, but this money is stuck in financial banks. Depression is coming. Dollar, people running. So what drives it? What drives inflation, from what I've gathered in history, is an expansionary phase of the real estate cycle in the United States, if you're looking at inflation in dollars. That inflation is being driven by residential real estate because the commercial banks are lending against new assets. So you've got house prices. So the real estate cycle goes up and down. It goes recovery phase, expansion phase, hypersupply, recession, and it cycles up and down. The price goes up when the inventory goes down. When the inventory hits critical levels, the price really starts to move. We are at critical inventory levels right now. That's why the price of housing and real estate has gone up so much. Inventories have been getting eaten up the past 10 years. Since 2011, at 10 months of inventory, we've gone steadily down all the way. In some places, really have less than 0.5 months of inventory. Prices are skyrocketing. Prices are trying to kick on an expansionary phase of real estate, which means we are going to build a bunch of new homes because we are short new homes. That's the whole reason that prices are going up so much. It's trying to kick on the new housing starts. When we build new homes, new loans against new homes makes it an inflationary period in a fractional reserve lending system. Commercial banks create 99% of the money supply. 99% of that, 99%, 60% is residential real estate loans. That is where your inflation comes from. The weakening dollar, where inflation comes, it weakens the dollar. That is inflation. Inflation is a weaker dollar. Then it kicks on higher interest rates, because when the dollar goes down and you have inflation, you get into a situation where you have real negative rates. That means that you're getting a negative return on your bond. Inflation goes up, the interest rate stays there, and it says, okay, I have a negative rate, let's sell our bonds. I don't want to lose money. I'm losing purchasing power by staying in this bond. Inflation keeps going up, and inflation or interest rates follow. Interest rates follow inflation. That is what a free market is. What they're doing is they're saying interest rates, no, we're going to buy you and hold you down. They have artificial demand through QE. QE is quantitative easing. Quantitative easing is just creating money from nothing and buying bonds to hold interest rates low. That's the whole point of quantitative easing. So what is happening is they're holding the bond interest rate down and inflation starting to move up. And it's creating really big real negative rates. Really big real negative rates is what causes precious metals to go higher, at least in a free market. I think that precious metals have not accounted for this real negative rate. That's what I'm looking for. So that's what I'm seeing. Here's something here. I'll talk about it. It says, how one can be so stupid, do opposite of what this guy says, and you will be okay. So what he's referring to is platinum. So he says, according to him, platinum minus 50% in the last 10 years is an excellent investment. If he act on his own advice, he must be a complete loser. So the reason I'm going into platinum is because it's down a lot. And the way that you identify value is you have to price assets against assets. And the majority of regular people are going to look at platinum and they're going to say, this is a horrible investment. And your viewpoint is the viewpoint of basically the majority. So the majority of people have the viewpoint that according to him, platinum is an excellent investment. If he act on his own advice, he must be a complete loser. That's what everyone is thinking. What I'm doing is I'm taking the opposite bet. The majority of people say that platinum's bad. I'm buying all the platinum. I am buying this stuff, the platinum, the real physical deal stuff. 1 ounce bar, platinum bar. I'm buying that stuff right there. And the reason I'm buying it is because it is cheap in relationship to all other assets. And the way that you make money, the purchasing power gains, is you have to buy an asset that's cheap and goes up against other assets. And the only way that you make outsized returns is by buying the undervalued asset. So I'm going to be looking, according to you, I'm going to be looking really bad because I am buying everything that is down. I'm buying uranium. I bought oil. I'm buying platinum. I bought silver in copious amounts in 2018 and in 2020. I got some really good deals. And I'm buying everything that's down. And what I am doing is I'm trying to see when these market conditions are going to change. The market conditions change based off the real estate cycle. The real estate cycle is going into an expansionary phase. We can see it. I've showed it on a lot of videos on this channel. In an expansionary phase, the precious metals account for the money supply, and commodities become in favor because of the real negative rates that I just described here just recently. That's the reason that money rotates, and it's going to rotate from bonds and stocks, and this is going to be a big rotation. This is a secular change. A 40-year decline in interest rates, I am projecting, will eventually stop and then move higher. We are going into an inflationary period. That's my guess. Now, if you don't think that, I would position differently. If you think that thesis is right, where we are going into an inflationary period, this is going to kill it. This is absolutely going to kill it because you're buying it when it's down and it's cheap in relationship to everything else. Last time we had a little inflationary period from 2000 to 2008, this killed it. This killed it right here. In the 70s, this killed it. This killed it right here. Look at inflationary periods in history, platinum's destroyed it. Now, if you look at the market balances looking forward at platinum, they look fantastic. So I'm spreading my money out. I'm taking these bets, these ones that are down and these ones that have good futures ahead of it, where I can see the demand, where I can see the supply having problems. And I'm making those bets. If you disagree with me, and that's fine, I wouldn't take those bets. Maybe you want to go into something else, and that's fine. You can disagree. But that's why I'm going into this stuff, because they're down, because the valuations are low. And that's my investment strategy. If you guys like this content, give me a thumbs up. Appreciate you guys listening. If you guys have any comments, love your comments. Please leave comments below. And thanks for listening. This is Finding Value.